There are a lot of investments you could do, but what makes ETF investments special? Why is it necessary for you to invest in an ETF? We'll find out in this video. Alright viewers, welcome to the Make Money From Home channel. Today I'll be addressing an interesting topic which centers on the best investing option, ETFs, Exchange Traded Funds. Ensure you watch the video until the end to have amazing insight about ETFs and get your investment ready. I'll be breaking things down bit by bit to aid your understanding. The first thing to learn is to have about 90% knowledge about what you want to go for. Now, what does ETF stand for? It simply stands for Exchange Traded Fund. We all know what exchange means, and trade, both are interwoven. When you go into trading, you're also exchanging. It's either you exchange money for stock or vice versa. What does fund mean? It's the sum of money or other resources set apart for a specific object. Funds are a quick way to invest in a group of companies with the snap of a finger. There are a lot of funds you can invest in, so ETFs are a kind of fund you can invest in the stock market with. ETFs are described as an exchange-traded fund, which is traded on an exchange just like stocks. It holds multiple underlying assets like stocks, commodities, and bonds, and tracks their indexes. ETFs could be a means of diversifying, as you could own thousands of stocks in any number of industry sectors and using different strategies. ETFs look similar to a mutual fund, but it's actually different, as mutual funds aren't traded on an exchange. Also, ETFs are more cost-effective than a mutual fund. As I stated earlier, ETFs are a means of diversifying. What I actually mean here is that it provides the opportunity to have a more diverse portfolio of investments in various companies to save you from risk. Most investment experts advise you to diversify, so a fall in one company's stock won't affect your whole portfolio, and this will keep the performance of your portfolio in a healthy state. In a nutshell, ETFs are a great way to get instant diversification. We have the Vanguard S&P 500 ETF, VOO, which allows you to invest in 500 of the largest U.S. companies. It's really nice and popular. Now, how does an ETF work? It's pretty simple. There are 3 steps involved. 1. There is an ETF provider that owns and considers the underlying assets, which includes stocks, bonds, commodities, or currencies, and bundles them in bulk and tracks their performance. 2. Investors buy a share of the bulk, i.e. a share of the underlying asset. Once they get a share, they become a shareholder. They indirectly own the assets of the fund, as they are entitled to a share of the profits, such as interest or dividends. Third, buyers and sellers trade the ETF throughout the day on an exchange. They trade at market-determined prices from the asset. There are various types of ETFs, but there are common ones in the market. We have index ETFs, which are common as most ETFs are index funds. It could be based on stocks, bonds, commodities, or currencies. It tracks the performance of the index by holding its portfolio either in the contents of the index or a sample of the securities in the index. The stock ETFs, which are meant for long-term growth, as they are less risky than individual stocks. It has different styles, such as large cap, small cap, growth, value, etc. The next one are bond ETFs. I'm pretty sure you must have heard about something like government treasury bonds. This type of ETF is safe and lower risk as it's financially stable. Lastly, we have international ETFs, where foreign stocks are recommended for building a diverse portfolio. It's an easy way to find foreign investments. I now believe you understand what an ETF investment means, how you could go about it, and its various types. Okay, I guess that's cool. Now, ETFs are your best investing option. Why? Disclaimer. Before we move on, if you're enjoying this video, do make sure to subscribe, leave a thumbs up, and let us know what tips and videos you'd like to see next. Let's get back to the video. ETF investments are good for beginners. Not only good for them, but also professionals. It's really a good investment and the best option. There are a lot of reasons to invest in ETFs. First, ETFs are lower cost, unlike mutual funds and any other investment product. They have a lower shareholder-related expense, unlike mutual funds that have a lot of expenses attached like redemption fees, brokerage expenses, short-term trading fee, and a lot more. ETF investments are safe from these. This is actually good for beginners with low income and investors as well. 2. ETFs give room for diversifying as you'll be exposed to a diverse variety of markets, like broad-based indices, broad-based international, country-specific indices, and a lot more. Diversifying provides an economic way to rebalance your portfolio and also make it less susceptible to capital erosion, which is an important consideration for beginners. Third, flexibility in trading. What I mean is this. An ETF can be traded at current market price whenever the market is open, since it trades officially on the market. But a mutual fund is bought or sold at the end of a day's trading. Last, transparency. ETFs have a transparent portfolio as you can search price activity for a particular ETF on an exchange. Also, funds holdings are disclosed each day to the public, whereas this is missing in mutual funds as this happens monthly or quarterly. Can you see now that these reasons are enough to be the best investing option? All right, let's look at the best high-growth ETFs. iShares Russell 1000 Growth ETF, ticker IWF. iShares Russell is a simple growth-oriented index fund that takes the top 1,000 U.S. stocks by market capitalization. It tracks the investment results of an index. Its portfolio consists of popular names like Microsoft Corporation, MSFT, and Apple, AAPL, with about 40% of assets in information technologies. Let's take a look at this. Invesco QQQ ETF, ticker QQQ. The QQQ fund is one of the top 5 exchange-traded products on the U.S. market, with close to $100 billion in assets under management. 80% of its portfolio are in tech stocks, while the 20% remaining are in communications. It is a widely held and traded exchange-traded fund, ETF, that tracks the NASDAQ 100 index. Its focus is on large international and U.S. companies in the technology sector, such as Apple, Amazon, Google, Facebook, and so forth, as well as the telecommunications sector. It has an expense ratio of 0.2% and an average daily trading volume of around 15 billion. Vanguard Information Technology ETF, ticker VGT. The Vanguard Information Technology ETF has an MSCI ESG fund rating of 6.88 out of 10. VGT has strong and improving management of financially relevant environmental, social, and government issues. According to Thomson Reuters Lipper Global Classification, Vanguard Information Technology ETF ranks in the 82nd percentile within its peer group and in the 75th percentile within the global universe of all funds covered by MSCI ESG fund rating. Have a look. Healthcare Select Selection SPDR Fund, ticker XLV. History shows that the sector that can provide the most reliable long-term returns is healthcare. This is because there are innovations in the sector in the form of new products and treatments. The Healthcare Select Sector SPDR Fund matches the returns and characteristics of the S&P Healthcare Sector Select Index. Its index includes companies from the industries such as pharmaceuticals, healthcare providers and services, healthcare equipment and suppliers, biotechnology, life sciences tools and services, and healthcare technology. It is the largest healthcare ETF, having assets of around $24 billion. Vanguard Small Cap ETF, ticker VB. The Vanguard Small Cap ETF is managed by the Vanguard Group Inc. The fund invests in so many different things, like public equity markets of the U.S., stocks of companies operating across diversified sectors, growth and value stocks of small-cap companies. The fund aims to track the performance of the CRSP U.S. Small Cap Index, while the investment seeks to track the performance of a benchmark index that measures the investment return of small capitalization stocks. Much has been said. In all, extended trading funds are a good investment based on a number of reasons. I hope you got a lot from this video. If you guys enjoy the video, then make sure to give it a like and ensure you subscribe to our channel and put on the notification to get updates on our next video. Thanks for watching, and until next time.